Hey, welcome to Rapid Fire Real Estate investing for busy people. This is deal review number 1, aka never trust seller numbers. In this deal review, we're going to look at a quadplex. So it was $350,000 list price, and they were saying the cash flow would be $1,000 per month total. So that means basically $250 per month per unit. Sounds great, right? But the problem is the seller's numbers weren't totally what a buyer would expect to pay in expenses and expect to collect in rent. So it wasn't going to cash flow at that. The first thing when we confirmed seller provided numbers was to look at the property tax. The seller was paying just over $900 a year in property tax, and that was because they had bought it 40 years ago at a low price. So obviously the assessed value would be reassessed when there was a transfer of ownership in a qualified sale. So what I did was go onto the Orange County Property Tax Assessor's website and click on the tax estimator, put in the sale price of $350,000, no homestead exemption since we weren't planning to live there, and the seller actually was living in one unit, so they were getting that. And I found out that our property tax per year would be about $1,300 to $1,400. The calculator gives you an estimate. So we're talking about $400 to $500 more a year than he was paying. So that took a little bit of that cash out. The next thing is property insurance. He was getting standard property insurance because he was just renewing his insurance policy every year. Well, the roof was over 22 years old. The plumbing still had copper plumbing, and the electrical box was from a company that no longer exists. So obviously nothing had been updated in over 20 years. Thus, when we looked at getting insurance, if we purchased it, new buyer, new policy, it would have over doubled the cost of insurance. So we were talking about an extra $100 per month more just for the property insurance, because we'd have to go into surplus line insurance. The next thing was utilities. There was no numbers for utilities, but we found out the owner was paying for all the water, and he was paying the electric for the exterior lights and only had one water heater, which was gas on the property, so was paying that. So that was going to be about $200 more a month than what was in his numbers. And when I say $100 a month more, $200 more a month, I mean for the whole property, not for each unit. The next thing was he had no budget for landscaping, but in the leases they said landscaping was provided. He was doing it himself, we weren't, so we had to add $100 a month for that. We then also had to add in septic pump out. So that's every other year about a $250 bill. So you have to add that in on a monthly basis to account for that. And also about every 10 years you're going to have to replace the drain field. Maybe you can stretch it to 15 or 20. So that's about $10,000 fee. The next thing was CapEx. Obviously that wasn't in his expenses. That covers the large things such as a roof. In this particular property, since it was fairly well maintained, I used 5% for my CapEx, although depending on the property, I'll use 5 to 7%. Next was repairs. He was claiming only a couple hundred in repairs a year, but that was because he was doing all the repairs himself and possibly delaying some repairs knowing he was going to sell it. So I did 5% again, and these percentages are of the monthly income, to repairs. Next was property management. He was self-managing. I would not be on this particular property, so we had to add 10% of the monthly rent, because that's the going rate in Florida. Depending on where you are, you might get 6 to 10, plus half a month rent divided by 12, because about once a year they renewed a lease and they charge you for that. So by the time you took care of all of this and then added in your mortgage, and he was assuming a mortgage rate of 3% when he did his offering an estimate of what you would cash flow as a buyer. And since this was an investment property, even though it was still residential, we expected closer to 5%. You were not going to cash flow at all. In fact, it would have been a negative cash flow. Ergo, we went back with a lower price, and how we calculated the lower price was to go onto the bank rates mortgage calculator, backtrack after you took the total rents collected, which we found were pretty close to market, so we didn't have to adjust those. And how we found that was looking on Craigslist at comparable things that were currently being rented, and saw what he was claiming the rent was matched what the comps were, and also getting a rent roll, which is what people were actually paid, and that was what was he listed in the offering memorandum. And told him, hey, this is what we can pay. He didn't accept it, so we moved on to the next deal. And that's why it's important not to trust seller numbers, because otherwise we would have been purchasing an asset which would be negative every month. Thanks so much, and please like, subscribe, and comment below. See you next time.